What's ahead for retail in Aotearoa? We're joined by Satish Ranchhod from Westpac to unpack the latest economic forecast and what it means for retailers. From interest rates and inflation to wage growth and consumer demand, this episode dives into the key trends that are shaping the months ahead. Kia ora, I'm Carolyn Young, Chief Executive of Retail NZ. I'm joined today by Satish, who's the Senior Economist at Westpac. Welcome, Satish. How are you doing?
Kia ora, Caroline. It's lovely to talk to you.
Look, it's been such a tough time and the economy's been really difficult, but what are the key economic indicators that you're watching right now that could signal either growth or contraction for the retail sector in New Zealand?
I mean, there are two big things that we're keeping an eye on right now. The first one is what's happening to households' interest costs. And over the last year, we've seen some big reductions in interest rates, but there's still a lot of households who are on those relatively high mortgage rates that we had over the last 2 years. And that's been a big handbrake on their spending. But the good news is, as I mentioned, interest rates have fallen a long way, and a lot of households are now rolling onto much lower interest rates that are around 150 to 250 points lower in some cases. That's a big reduction, and it's going to put a lot of money back into a lot of households' wallets, but it has been slow because people do fix their mortgages for a while. But over the last few months, we've started to see that roll over onto lower rates coming through, and that's going to continue through the final months of this year and into 2026. So hopefully that'll give a bit more of a boost to spending through those holiday months and in the new year. But on the other side, there are still some factors that we are quite concerned about. First is the labour market.
Yep.
Definitely still a soft picture out there, unemployment lingering above 5%. And for a lot of households, that's certainly been a break on their spending. Even those households who are still in employment, well, they're a little more cautious about their spending. They're watching the penalties still. But overall, things are starting to look a bit more mixed in the economy. Hopefully, we'll see a bit more of that positivity coming through over the next couple of months.
So would we expect that when more of the consumers start refixing onto these lower rates, we're going to see $300, $400, $500 more in their back pocket a month? Do you think that's going to impact consumer confidence, and do you think that will then start to improve? Because that's one of the key things we're looking at.
That's exactly it. I mean, the interest rate reductions we're talking about could be quite substantial for families on an average mortgage. You're right, it could be around that ballpark of about $300 a month in terms of the interest rate savings they get. For their weekly shopping, that's quite a significant boost. And importantly, as we mentioned, interest rates have fallen a long way, but the impact hasn't been felt. So hopefully that does set us up for a better few months, because we're seeing that over the next 6 months, around 40% of our mortgages are going to come up for repricing. So it's a lot of people who could see quite a bit of relief.
And so therefore, we're hoping that that relief will see some relief into the retail sector and people will start spending in terms of that retail space, right?
Exactly. I mean, as we get that relief on their finances, households are more likely to pick up their spending. In the near term, it's probably going to be a bit more focused around essentials like groceries. But when you start getting that relief on their incomes, people do spend more on discretionary items like furnishing and apparel. So we're looking to see how that tracks over the Christmas shopping period too.
So do you think we'll see changes in that fashion and homeware space this year, or do you think we might have to wait a little bit longer before we see that flow through into sort of that more discretionary space?
I think we're likely to see some of it coming through this year. Some of the retail spending stats we've already seen have already shown a bit of a pickup in that space, but it'll become more prevalent as we go into 2026. But we shouldn't have to wait too long into the new year before we start seeing that come through, because we have already seen many households rolling onto those lower rates. It's coming through right now. So the impact should start to hopefully be seen at the till.
So we just have to hang on just a little bit longer, team. I think
Hopefully, yeah.
that's the executive summary. Now, look, you talked a little bit about unemployment, but what role do you see wage growth and employment levels sort of playing in sort of shaping that retail demand as we head into next year?
I mean, when we've been talking to businesses around the country, what we're hearing is that they're no longer shedding staff or going through restructures like they did earlier in the year. But at this stage, they're still reluctant to take on new staff. They want to see that the demand through the economy has really turned around before expanding their workforce. And I think that's going to be quite important for confidence, at least in the near term. That softness in the jobs market, one factor that's likely to mean that households are still a bit cautious about their spending. But over the course of next year, we expect that the labour market is going to improve. That will hopefully flow through to some increases in spending. On the wages front, I think we're probably in for a period where wage growth is going to be a bit more modest. We had some big increases through the pandemic when things were really tight. I think it was probably a bit unsustainable, just like some of the other trends we saw through that period were. Going forward now, it's more moderate rates of wage growth, unless you're in quite specialised roles. And I think it's probably going to remain that way for a little bit longer.
And hopefully, look, I know that retailers are saying to us that we're hoping for just a really modest increase in the minimum wage just to support their ability to get their head above water right now. So it'll be interesting to see how that plays out. And our members are telling us that they are reluctant to hire more right now because they haven't been able to see that growth in their business. So exactly what you're hearing is what our members are telling us. But when you think about small and medium-sized retailers, in New Zealand, there's thousands and thousands of small and medium-sized retailers. They're trying to navigate the economy. It's really uncertain while they're trying to plan for the future. What advice would you give them right now?
I mean, there's two big things that have really stood out to me. The first is the importance of ongoing cost control. I mean, hopefully, we're at a turning point for the economy going into a better period in 2026. But I'm still hearing a lot of pressure on operating costs. And importantly, a lot of businesses are telling us that costs may be going up, but they're struggling to pass it on. Maybe not as to the same degree as we saw over the past few years, but it's still there. The New Zealand dollar's come down. I think those cost pressures will be an important factor to keep in mind for some time yet. The other factor, though, is around positioning. We've gone through a pretty tough period over the last few years, but the factors that will hopefully support growth, they're increasingly in place. We've had those lower interest rates. Parts of the country, we've got those strong commodity prices, especially when you go down south. We're seeing some more positive retail spending trends down there. I think businesses, if they're in the right position, are probably going to be thinking about, well, how do I position myself for the next phase of that cycle? We see it often in quite flexible parts of the economy, like hospitality, where we're seeing new operators coming in anticipation of that. In the retail sector, for some operators, this could be a good time to think about, well, how do I position myself? In the near term, it's probably still a question around focused on essential spending, but longer term, hopefully we could be seeing that pick up in discretionary categories as well.
Yeah, look, fingers crossed. I think that's where we're at right now, and looking for that turn next year. And I know we talked last year at this time, and we were thinking the same thing for next year, but hopefully we're much closer than what we were last year.
Well, I think the difference from this time last year is that we saw those interest rates starting to move, and we're waiting to the impact. Now we're past that point. We're actually seeing it getting into households' pockets, and it's now more a question of how do households respond. Hopefully, it's going to be a stronger story next year.
Yeah, look, fingers crossed. And look, thank you so much for joining us today, Satish. It's always a pleasure to speak to you and hear about how Westpac is supporting retail businesses with the latest economic forecasts. Your expert knowledge and expertise is just really exactly what our members need. So thank you so much for sharing with us today.
My pleasure. Lovely talking to you.
Look, I hope everyone enjoyed this episode. Don't forget to visit www.westpac.co.nz to find out more information. This was part of our Empowering Retail series, your go-to resource for short, actionable insights designed to take your retail business to the next level. Watch out for other episodes and don't forget to subscribe. Until next time, ka kite anō. Bye for now.